Hello, hello, hello. Welcome to our stock trades. In this video, we're going to go ahead and talk about Clover Health. Lots to talk about, like a lot. So if you're looking for a short video, just FYI, this is not going to be a short video. There's going to be a lot packed into this, okay? So please share this video. And just to kind of, it's been a while since we posted a video for the past couple of days. Let me just kind of tell, first off, how are you guys doing? Miss you a lot. Please comment down below. What have you guys been up to? What's been going on? Yeah, I look like a hot mess right now. I am so tired. I've been doing 12-hour shifts every single day, and then I have to go do work, research, all these things. But today was a difficult day. Today was a very tough day. Not because of the stock market. We had patient. Oh my God, how many codes that happened this week is incredible. We had, I can't say a lot because these are really patient identifiers, but today was very hard. Today was very hard with patients. Today was very hard. It is hard. Today was definitely a hard day in the hospital. We just got flooded with patients, and it wasn't because the workload was hard. No, screw that. Bring them on, right? It's the stories that really take a hit. It's painful. Sometimes you just can't fix things. You know what I mean? Brain dead means brain dead, right? We could talk about that if you guys are interested. But now let's go ahead and shift gears to Clover Health. All right, so without further ado, I want to ask you a question. So a lot of you folks, not a lot, well, a decent amount of you were like, what's going on? What's happening to Clover? What is going on? Well, first off, the whole market's down, number one. Number two, I want to ask you a question. And even the people that understand, I want to ask you a question too. What has happened with Clover Health since last earnings? Have they lost business? Have they went bankrupt? You see, a lot of retail investors just focus on the stock price. That's all they do. Oh, I'm going to buy when it goes back up. Well, you're going to lose, right? That's just how it works. And retail investors lose. So we're getting close, hopefully, to a capitulation phase in retail so we can start trending back up. And we'll talk about this regarding the Federal Reserve at more close towards the end of the video. This is just a lot that's going to be packed. So I'm going to go ahead and I'm going to show you this diagram here, okay? So I want you to tell you. So first off, this is essentially the smart money, dumb money confidence. Now, for people that don't know this, I'm going to go ahead and re-explain it. If you do know it, sorry, you're going to have to listen to me again. So smart money are the hedge funds. They're the billionaires, and dumb money are retail investors. They call them dumb because they don't meet a threshold, which I think is around $100 million and a little bit more, right? So how do they know how much money you have, right? Well, because I was gonna crack a joke, but I'm so tired right now. So the reason why they know is that whenever you go ahead and you open up a phone and open up a retail broker on the computer or whatever, you put in your social security, you put it to the broker, right? You tell them how much money you make, okay? And and also they have track over what you buy and sell. Well, guess what? Hedge funds can buy that information and see what you buy. It's very clear. And that is exactly what we see here. Dumb money has just literally, so it's funny, when stocks go up, dumb money buys. And smart money is like, yeah, I'm going to chill. When stock goes down, dumb money sells. And then smart money buys. And smart money also starts shorting. Okay. We're also going to go over Andrew Toy's profitability and everything. This is going to be a very compact video. Okay. Just understand there's a lot going on here. So sit back, relax, get a beverage. I didn't even get a beverage because I'm so tired right now. I'm just going to sit in this chair and talk because that's just all I can do right now. It's been a really tough day. Okay. So now we're going to go ahead And we're going to look at the equity hedging index. Now, I want you to tell me, okay? I want you to tell me how many times does this equity hedging index blue line cross the green dotted space? I want you to tell me this. How many times does this blue line cross the dotted space? Okay? I'll do it with you. Who's ever a gunner, you can comment down below, but let's do it together. 1, 2, 3, 4, 5, 6, 7, 8, 9. And we can conglomerate this one as like 10, right? Every time, not every time, but the majority of times, if you clean up the signal, every time this crosses this line, it is a great time to buy. You don't want to buy down here. See how the COVID right there, 2020, the drop right there? Look at that. Just shot up. And then it started trickling back down because the stock market going up. You don't want to buy when it's here. You want to buy when it touches the green line. Okay? You see that? So that's the goal. You don't want to buy when stocks are above their intrinsic value. Okay? You want to go ahead and buy when stocks are below their intrinsic value. Now, we're going to take a little detour, a tangent line. For people that don't know, this is what a tangent line looks like. Okay? So when you look at the slope of a curve, it's a tangent line. So we're going to take a little tangent. Okay? So we're going to go ahead and talk about this. Okay? We're going to talk about day trading. Okay? So today, if you were in the market, and I messaged this to our members, oh, thank you for the heart. I said, for day traders only. I said, for experienced day trader, when the market's negative, like this, SQQ and UVXY, okay? I don't hold these overnight, but I do trade them. Remember, this is only for people with experience. I would paper trade them first to learn. You know what I mean? Just learn, okay? But let me show you what SQQQ did. 8%, right? You see how day traders like to, you feel me, right? And you could have been short for the whole month and, you would have been up 28%, a little bit over actually, 44%, okay? Another one, to hedge, right? It's just an easier way to hedge. It's, if you can use technical analysis. Another one here is the UVXY, not as big as the SQQ, but, let me, 1 month here. Look at that. Still pretty good, right? But again, these have decay. I wouldn't touch these until you're an expert. Just if you're new, just forget I even said that. Okay, so now that we talked about day trading, I just wanted to kind of just put that there. Back to Clover. Okay. So very clear, okay? You don't want, okay, let me go back here, okay? You do not want to buy at the peak of the market. Retail investors, if you told them to sell here or overvalued, they would talk crap about you. Now, when we're up here at undervalued levels, you tell retail investors, oh, it's undervalued. Guess what they do? They talk crap about you, right? Because retail investors, unfortunately, there's some people that are just designed in Wall Street to be poor. It's just how it works. It is what it is. Wall Street is not made to make you money, okay? I'm going to repeat this. Wall Street is not designed to make you money. You know what it's designed for? To steal your money. Okay, let's go ahead and see if we can find that quote. Wall Street is not designed to, Wall Street is designed to steal your money. Let's see. There's a quote about it. Anywho, I got to find it. I think it was by Warren Buffett. You do not want to buy at the top. You want to buy near the bottom. What is the bottom? Well, if you do, you have to do intrinsic value calculations, okay? Now let's go ahead and let's continue on with our story. Mr. Vivek here said the first message he said, then we're going to go ahead and read it together. I'm going to do the speech to text, so it might sound weird for you, but I'm going to explain it. He says, the first thing he says, and I made it clear in my last video, they need to talk about profitability, okay? He said, as we go into 2023 and 2024, the next phase of Clover is absolutely about profitability. I'm going to say this again. And again, I told you my calculations set 2024. Then I said, hey, you remember how many times I said that? I said my calculations say 2024, they're going to be positive. He went ahead and said 2023. I'm like, well, okay, maybe they might be free cash flow here. And then maybe for 2024, sometimes people listen, they don't watch. Maybe in 2023, they may be just free cash flow positive and net income negative. And perhaps in 2024, they'll be both free cash flow positive and net income positive. I don't know, right? But I'm still pegging them for 2024. And then 2025, 2026 will be great. Okay. Now, I'm going to repeat this again. As we go into 2023 and 2024, the next phase of Clover is absolutely about profitability. He uses the word absolutely. Okay. You understand that? Okay. This gentleman here, when he talks, this is a very big word. Absolutely. Okay. You understand that? Okay. Now let's continue. So let's go ahead and I'm just going to read it. I don't want to read all that, honestly. Let me just hold on.
We feel we have absolutely proven that our wide network plans are fundamental differentiators, and net growth is a moat for us. So balancing net growth with MCR improvement is something you will see us do year over year.
Great. So here he talks about MCR, medical cost ratio improvement, and then he talks about a wide network choice of, in terms of creating a moat. What is the moat? Well, the moat is the Clover Assistant. Let's continue. I'm going to have the computer read it to me because I'm just like burnt out from today. Not because it's just not like burnt out from work, just emotionally burnt out. Because when you see patients hurt and their families cry, that is the most painful thing, especially when I'm like tied behind my back and I'm waiting to become a neurosurgeon so I can do something with my hands. It's, okay.
The country just doesn't have enough doctors, and certainly not primary care doctors. While the number of physicians is rising, it can't keep up with demand, particularly given the growth of our aging population and the complex care they require.
It's true. You can employ as many physicians as you want. You can just have an army of them. You will not keep up with the aging population. And I'm telling you right now, the way the healthcare system is structured, it's structured like, well, it's not structured like how we fly our planes in the United States. All right. It's structured how a child would fly a toy plane in the United States. The only time someone gets attention is if they crash. And by the time that happens, it's too late. Okay. It's a sad part about healthcare. It's sick care, not healthcare. It needs to change. Okay, let's go.
We aim to support every primary care physician, arm them with the right data at the right time, and thereby help them care for their patients.
Absolutely. Great.
We ask our physicians to spend a little more time per care encounter and use our platform, Clover Assistant, to deliver personalized care. With Clover Assistant, our aim is for physicians to catch diseases earlier and manage those diseases better.
And if you catch diseases earlier, it's called preventative medicine. And guess what? They like to focus on people of color. Well, there's a project I'm trying to work on that's going to be pretty freaking cool. And it's going to be related to what they're trying to do here, but it's going to be in the neurosurgical context, which is going to be very important. But enough for that'll have a video, that'll have a day, and that'll have its time. But right now, that's actually big. We want to catch diseases early. And I got to contact that doctor so we can interview here. Remember that video I made with the interview where she said she loves it? She loves the Clover Assistant. Yeah, well, there you go. It's a continuous theme, okay? It's a continuous theme. All right, let's go here. Whoa, hello. Let's go backwards. All right. We asked
our physicians to spend a little more time for care encounter and use our platform.
Nope. Let's go here.
Technology is part of who I am, and it is part of what makes Clover different. That, paired with our mission to improve every life, is what will make us forever different.
Technology is part of who I am, and it is part of what makes Clover different. That, paired with our mission to improve every life, is what will, I personally think, I don't even think Vivek said this, and I haven't read the article yet. I honestly think Andrew Toy said this. Seems like it, but I may be wrong. We'll see. Okay. We'll see. Let's see here. All right. Let's see here. So now let's go ahead and let's go to this. And I'm going to have the computer read it, and then we'll go ahead and dissect it. And now if I pick something important, we'll talk about it. All right. Let's go ahead and read this section.
Let's start by clearly defining who we are as Clover and what makes us different. Our mission at Clover is to improve every life. We're working to ensure that every single person gets access to data-driven, personalized, primary care from a physician they know and trust.
Okay, first off, I already have to stop it. Data-driven, right? That's where healthcare is headed. It's called data-driven care, evidence-based medicine. If you don't believe me, here. Evidence-based medicine. Look at that. Look at that. It has its own little thing. Look at that. Evidence-based medicine. Okay? What the patient wants, what the clinician knows, and what does the literature say. You combine these things, and you're going to get something called evidence-based medicine. See how that? It's called evidence-based medicine. It is really helpful. All right. All right. And that's what they're trying to do. Okay. That's what they're trying to do. All right. Let's continue. Okay.
Every one of us will need primary care, especially as we age. That's why we're so centered on Medicare as our opportunity. Not only is it a massive market, but it's also a place where data-driven primary care can make a real difference in giving patients longer, healthier, and happier lives. Setting our sights on helping every single Medicare patient differentiates us from almost every other approach. Others rate and rank doctors, then narrow available care to just a few preferred physicians, which narrows the scope of patients those organizations will serve.
Exactly. And that's the sad part about healthcare. The way insurance companies work is like, hey, this is what you can see, whether you like it or not, whatever. And if you want to see out, depending on your plan, if that's not your plan, then you have to pay for it because we're not going to support you. What Clover says is, you know what? We're a PPO and a Medicare company, and you decide who you want to see. You are in control of your health care. If you are Black and you want to see a Black doctor, we'll get you anything you want, okay? And I say Black because if you look at the AAMC data, patients prefer doctors from their own culture. It just works that way, okay? It just works, okay? And if you don't give patients what they want, then you're not putting the needs of the patient first. And that's what Clover intends to do. And I'm telling you from experience, whenever you put the needs of the patient first, you will become successful, okay? It's very clear, okay?
At Clover, we recognize a far more existential issue. The country just doesn't have enough doctors, and certainly not primary care doctors. While the number of physicians is rising, it can't keep up with demand, particularly given the growth of our aging population and the complex care they require. This ever-increasing demand for medical services will lead to dramatic physician shortages. It will affect all of us, but the brunt will be on those who do not have existing access to care. No split. Chronic conditions.
Absolutely. And the people with chronic conditions are going to continue going up. In fact, I actually spoke to a geriatric doctor, which primarily focuses on patients that are old. And you know what's sad? She told me that some patients don't have money to eat protein to buy meat. They don't have money to buy meat, and they're just literally slithering. They're literally becoming scrawny, and they don't have the muscle mass anymore because they can't even afford beef. It's terrible, okay? And the amount of chronic disease is increasing. And guess what? You know how many doctors want to retire? I talk to so many doctors, and they're just telling me, I just want to retire. I just want to retire. That is so sad, man. That is so sad. You know, no matter how hard it gets, dude, the roof can fall on your head, dude. No matter how hard it gets, you took a goddamn oath, okay? But I understand everyone has their limits. It's, you know, so it's tough. Okay. Let's continue. Let's read.
Narrow networks will serve those lucky enough to utilize them, but we will never solve the problem of high-quality provision of healthcare by narrowing who our members can see. So instead, Clover takes a different path to scale. We aim to support every primary care physician, arm them with the right data at the right time, and thereby help them care for their patients. We ask our physicians to spend a little more time per care encounter and use our platform, Clover Assistant, to deliver personalized care. With Clover Assistant, our aim is for physicians to catch diseases earlier and manage those diseases better. When that happens, we believe everyone wins, and we couldn't wish for better impact from our work and healthier members, a more sustainable healthcare system, and doctors feeling more fulfilled in their mission. We're proud of the large number of members who have seen Clover Assistant Power Doctor in a few short years since the launch of the platform. And
in fact, you know what I can do? No, that's coming from. I was gonna have it read it to you that you can hear it even better. But let's see.
Clover Assistant to deliver personalized care. With Clover Assistant, our aim is for physicians to catch diseases earlier and manage those diseases better. When that happens, we believe everyone wins, and we couldn't wish for a better impact from our work and healthier members, a more sustainable healthcare system, and doctors feeling more fulfilled in their mission. We're proud of a large number of members and have seen a Clover Assistant powered doctor in a few short years since that launch of the platform, and our ambition is to keep scaling this upwards.
There it is. There it is. There it is. There it is. There's their plan. They've seen how it helps with MCR. They see, what did I tell you what that lady said? You should have seen the when she said it before. She's like, I love it. Please tell them, do not take it away. We can't live without it. You hear what she just said? We cannot live without it. Okay? What Clover's going to say now is, let's say if a patient, doesn't want to do Clover, the doctors most likely now can possibly pay for Clover Assistant to even take care of Humana patients, because it's going to be just a healthcare system, kind of like a Epic or like a Cerner for their own little family doctor practice. You see what I'm trying to say here? There is a lot of opportunity to scale Clover for fee-for-service. All right, let's go ahead and let's read what else here we have here.
We see a real difference in the caregiving by these doctors as they're catching and managing conditions earlier. As a result, we are focused on continuing to grow our physician user base and are taking a multi-pronged approach to doing so. We are also absolutely focused on physician delight. We know that workflows are burdensome for people.
Sorry about that. Alexa, I had to cut off Alexa. She wasn't talking too much.
Catching and managing conditions earlier. As a result, we are focused on continuing to grow our physician user base and are taking a multi-pronged approach to doing so. We are also absolutely focused on physician delight. We know that workflows are burdensome for PCPs, resulting in high burnout. We're investing in UI improvements, our data interoperability, and their integrations. We already know that physicians love what Clover Assistant can do for them, and we will continuously make it easier and easier to use. Within our non-insurance segment, our Clover Assistant powered direct contracting entity has experienced tremendous growth. Based on this incredible demand from physicians, you will see us invest even more deeply into fee-for-service, and we plan to launch into other value-based programs to broaden our portfolio.
Exactly. There it is. Fee for service. There it is, baby. Fee for service. I'm going to read it. Based on this incredible demand from physicians, you will see us invest even more deeply into fee for service. And we plan to launch into other value-based programs to broaden our portfolio. Broaden what portfolio? Think about that. All right, number one, there's that. Number two, I honestly think Chamath Palihapitiya in his All In podcast specifically was referencing Clover, and I believe they returned that money because they accidentally bought the SaaS, whatever Clover Assistant was buying, and I believe they returned that so they don't have to report it. I really believe that, okay? Because if you look at all the companies that he was talking or that he has, none of them went SaaS. It was interesting. The one that most likely will in the future, based on their own investor presentation, which I analyzed to its bare bones, is going to be Clover. All right, let's go ahead and let's keep going.
Now, I want to talk about our in-home care capabilities that we've built up over the last few years. Our home-based primary care team.
So Dr. Kumar Damaranjan is one who's leading the in-home care capabilities. That's a big thing now for geriatric populations. Let's continue.
Our home-based primary care team is dedicated to achieving improved health outcomes, reduced medical expenses, and preventing hospital readmissions. Furthermore, our home care practice has grown tremendously within New Jersey, and we believe that we have been very successful in managing the care of members in a distributed environment. The pandemic showed us that care is decentralizing from brick and mortar, and our Clover Assistant powered home care practice is leading the way to that new world.
Yeah, that's a big deal. Let's go. Let's keep going.
2023.
So they're essentially seeing that they're getting and preventing hospital readmission rate. That's a big deal. That means that's the number of times if a patient comes back to a hospital. You know how much money that costs? And if you can prevent that, imagine how much money you're going to save.
As we go into 2023 and 2024, the next phase of Clover is absolutely about profitability. With the COVID headwinds received.
Yeah, I knew Andrew Toy was talking about this. I think Vivek was just quoting Andrew Toy there. Okay, so as we go into 2023 and 2024, the next phase of Clover is absolutely about profitability. There you go. There you have it from the future CEO. Okay, let's keep going.
With the COVID headwinds received, we believe the hard work we've done over the last couple of years will firmly emerge in the economics of our business. On the insurance side, we will be paid at 3.5 stars in 2023 on our flagship PPO. The increased revenue from star rating improvement will help fund great plan benefits for our members, as well as improve MCR performance. We believe this, combined with exciting operational improvements that already have been affecting our 2022 MCR results, will be strong tailwinds for MA economics.
There it is. They're talking about the star improvement, and that's going to help with their flagship PPO plan. It's going to help with the MCR improvements, regardless of economic uncertainty. All right, let's go.
While we intend to continue to grow at industry-leading rates, we're firmly prioritizing profitability through achieving.
So there it is. Okay, I'm going to read this because we're getting into the juicy stuff. Okay, so I'm going to go ahead and read this. Okay, all right, Coco, stop playing with your toy. Okay, your dad's a terrible dad. She just leaves it. Oh my God, so sad. Okay, While we intend to continue to grow at industry-beating rates, so they're going to say, they're pretty much telling you, we're going to grow more than the industry. So what you can do is you can calculate the industry, which is, I think, around, remember we said anywhere between 20 to 30%. So we'll see next year. Next year is going to be the big one to see how far they grow. If they continue growing at 50 to 80%, woo, that's going to be very good. All right. While you guys are going to be looking at these videos, and if you're watching this video right now and it's 2025, I'm sorry. I'm really sorry. I wish you saw this earlier. Okay. I'm going to read this. While we intend to continue to grow at industry-beating rates, we're firmly prioritizing profitability through achieving smart, sustainable growth, smart and sustainable, which will help power MCR improvements. We feel we have absolutely proven that our wide network high choice plans are fundamental differentiators, and that will grow, in terms of it will grow, and that growth is a moat for us. Growth is their moat, okay? So balancing that growth with the MCR improvement is something you will see us do year over year. And you're going to see that, and it's going to translate to profitability. All right, let's go ahead and let's continue.
On the non-insurance side, we will drive hard, broadening our appeal to practices looking for help moving a fee-for-service population onto value-based care. We have received significant interest from providers in working with us to care for the Medicare fee-for-service patients, and we are exploring various opportunities for doing so, ranging from continued participation in innovation programs such as Afroreach to potentially launching statutory programs such as the Medicare Shared Savings Program.
There it is. Looking at the ACO Reach and making a program directly for that. Let's look a little bit into here. We will drive hard on broadening our appeal to practices looking to help moving their fee-for-service population into a value-based care. So they're going to be creating portfolios of revenue that are going to be strategic for the profitability, for that piece of the puzzle to fit itself within our intrinsic value calculation. The piece that we've been doing, the 5% of revenue, is finally going to be filled. And then you're going to see the stock goes to its intrinsic value. And all of you are going to see the beauty of that day. All right.
Between both the insurance and non-insurance business lines, we're excited to be bringing Clover Assistant to more doctors, helping more eligibles, and to be focused on delivering profitability sooner rather than later. We will, of course, have to prove this through the rest of 2022. And
there it is. So we're going to try to bring the Clover Assistant to more doctors. We're going to basically keep growing, and we're going to be focusing on delivering. There it is. And to be focused on delivering profitability sooner rather than later. We will, of course, have to prove this through the rest of 2022 and into 2023, but we're excited to do so. So they're saying that we are going to see some juice in 2022. And I think this might be a little hint for the astute listeners of the crowd. But I'm thinking 2024. But I get it. They're very excited. I would be too. I mean, come on now, right? I would be too. Okay. They're building something that's going to impact patient lives. You know how many lives they're going to save through software? You understand that? It is a doctor's dream to be able to build software that's going to save lives. It's my dream that one day I can do something like that. It'll be really cool. All right, let's go.
At the end of the day, for those who work at Clover, those members served by Clover, and those who are investors in Clover, I want to assure everyone that we are laser focused on building a fundamentally profitable company that can scale by way of our physician-centric technology, far beyond those companies that work with limited physicians or who depend on high levels of professional services. Technology.
So there it is. This is the message to him, okay? I want to assure everyone that we are laser focused on building a fundamentally profitable company. I talked about the video. Remember I said, I'm like, they need to do something to the investors to make sure they communicate this profitability scale. Okay. So let me just pause. Let's do another tangent line. Okay. Now let's go ahead and type in CLOV Stock. Okay. And I want you to come down to this article. Okay. And I want you to, let's do this exercise. Okay. So you just follow along, use your mind. Okay. 7 NASDAQ stocks to sell before they die. Okay. Are you ready for this? Clover Health Investments. This is their reason. Investors angered by big losses are suing the insurtech company. Sell before they die. Okay. So they're telling you to sell the stock because of how investors feel. Well, we already know retail investors, sadly, majority of them, sadly, the retail space is considered by, not my terminology, I don't like that word, but screw what I like. They call retail investors dumb money. And they're telling you the reason why you should sell this stock is because dumb money is angry. Okay? So that's interesting. So they're telling you to sell the stock because dumb money is angry. So what we're going to do right now is I'm going to ask you a question. It's a rhetorical question, but needless to say, I need to ask this because there are some people that know this market cycle and there are some people that don't. And we want to help, right? That's the goal, right? So do you want to follow smart money or dumb money? So what is smart money, dumb money? Do you want to buy at the bottom to make money? Or do you want to be like dumb money that likes to buy in at the peak? You see, literally, dumb money spikes, stock spikes. Stock fall, dumb money sell. Okay? So what do you want? Do you want to listen to an article like this that obviously was, who the hell is this guy anyway? Alex Soros. Who I'm curious, who is this guy? So you know what? Let me click on his link. Maybe I probably have, let's see here, 500 connections, business operations, content development, equity funds, global experience, client relations. It could be him. I'm not too sure. So he was an MBA student, self-employed. There it is. Financial writer. That's what he does. Financial writing. You don't know if this guy, we don't know. I'm not saying he did get paid off, but we don't know who these people are. You see, generated significant boost in view count by developing well-researched and concise articles that blend SEO research content. Do you know what SEO research means? SEO is called search engine optimization. It's the process of improving the quality and quantity of a website traffic, a website to essentially get its shit on Google. Excuse my language, my humblest apologies. But he's writing these articles because it gets views, okay? And he's telling you that you should listen to dumb money. Not, again, these are not my words. I don't want to call retail investors dumb. That's disrespectful. But hedge funds call retail investors dumb because they like to buy at the top and sell at the bottom, okay? And he's telling you to listen to these dumb money folks, right? And I'm asking you, who do you want to listen to? I'm using this Fintel here for the SEC 13F filings to help you, so you can decide. Do you want to follow dumb money or do you want to follow smart money? So these are the most recent SEC 13F filings. Okay. JP Morgan Chase bought some more. Oh, would you look at this? They capped their 2.8 million shares. Smart money is buying at 250. And now and by the way, this is 3 months ago. If you look at the file date and all that, it's usually 3 month lag. Okay. So you got to ask yourself, what do you want? You want to be like smart money and buy? Guess what? The people, in fact, you know what we can do? Let me see if I could find the retail ownership question here. If I can find, let me see if I can find this here. There it is. There it is here. Look at retail investors. Look at this. Let me bring you another one. Look at that. Okay. Invested for 199 days, sold for a 34% loss. 22 days, sold for a 17% loss. 1 hour, invested for 1 hour and sold for 0.75. Listen, guys, do you really want to follow dumb money? The guy bought it for an hour. It dropped literally less than 1%. I'm out of it. Come on. Okay. Oh, this is incorrect. Let's go here. This is low. We don't like locked data. We like unlocked data. Here's the unlocked data. Okay. So you could see it, guys. I mean, you got to ask yourself, what do you want? Smart money or dumb money? You choose. But guess what? The people that bought at the top that they're selling, they bought all your shares right now. All these shares, the $2.50 region, they're stealing your money. Oh my God. Oh, but it's okay. It's okay. You did it. You want to sell because investors are angry by the big losses. That's why you should sell. And they're suing. They're suing. Okay, I'm sorry. There's something called, a disclaimer that says, stocks can go down. These lawsuits won't make it to anything. Okay. They can go as far as they can, but at the end of the day, they won't make it to anything. Because as soon as that stock goes up, in 2-3 years, guess what's going to happen? You think that lawsuit's going to mean anything? Did it attack the fundamentals of the business? But unfortunately, a lot of retail investors came in 2020. They're new. And they're going to be taken advantage of. And it is what it is. Okay. I don't know about these other stocks. Like, for example, Mullen, seriously. It's kind of funny how these two companies, Beyond Meat actually has potential and Clover has potential. It's kind of funny how they put these two first. It's not like it's an alphabetical order, because if it was, Aurora would be on top there. You know what I mean? So it's just kind of funny. You always have to kind of analyze stuff and think about it. You know what I mean? Because you really can't trust anything that you hear about. Okay. So let's go ahead and let's go back to Mr. Andrew Toy. Let's go ahead and read the rest of this.
At the end of the day, for those who work at Clover, those members served by Clover, and those who are investors in Clover, I want to assure everyone that we are laser focused on building a fundamentally profitable company that can scale by way of our physician-centered technology, far beyond those companies that work with limited physicians or who depend on high levels of professional services. Technology is part of who I am, and it is part of what makes Clover different. That, paired with our mission to improve every life, is what will make us forever different. I'm honored to be stepping into the role of Clover CEO and to have the support of our amazing management team. We're excited about the next chapter and hope you are too.
There it is. I mean, what type of passion do you get from this guy? Technology is part of who I am. Okay, I feel that way with my profession, right? Let me see if this is just kind of a generic word there. All right. Well, there it is. There it is, ladies and gentlemen. There it is. Okay. So let's go ahead and let's put us here. I'm going to go ahead and move this, kind of moving all the screens here, and let me just talk to you guys. I'm like a hot mess. I'm so tired. The hospital was very tough, but I really wanted to make this video and just kind of pack it in with information. I miss you guys a lot. And I'm having my Mayo Clinic talk tomorrow. So that's going to be very tough, day, because I got to put in a lot of work, but I signed up for this. I'm living the dream. Let's go ahead and let's see what questions people have. I'm just going to go through the chat right now, so excuse if I don't say anything. Yes, right here. So, I still need to follow up with my due diligence, but I have heard that Europe, let me lower. There it is. Europe, central chair, they went ahead and started to turn on the Burr money printer. They started to turn on the money printer. And that's interesting because, that's going to increase asset classes. The stock market, equity market's going to do well. And it's going to push more pressure on the Federal Reserve to do the same thing. Because, again, this is America. We care about money. That's all we care about in this country. And if you shut down the stock market, we ain't going to be happy, right? So that's something to consider, okay? And I think it's going to happen sooner than we expect. All right, let's go ahead and see. Well, it's fairly no. Sorry, I'm speaking to my dogs there. Well, the question here says, why does Berkshire Hathaway have $2 billion in GM and $0 in Tesla? Well, if you look at Tesla, it would need to grow significantly year over year to sustain its growth, to sustain its stock price. It looks like GM, if you look at the intrinsic value calculation, perhaps it pretty much would be undervalued. And another hypothesis is, Warren Buffett doesn't like to invest in companies he doesn't understand. He's made that fairly clear. On our Al Stock Trades Mastering Stock Market course, it does talk about, we have a section where you can just look at all of Warren Buffett videos to help kind of get in his head. Well, here's the thing, Rob. If you go ahead and take a look at Vivek here, I put it away. He pretty much quotes Andrew Toy. He kind of puts him in quotations, so it's pretty much what he's saying too. But he's still going to be on the executive board. And I would definitely love his continued expertise. All right. So let's go ahead. Yes, Biden with his health agenda recently spoke about it. Yep, we in our Discord, one of our members posted about that. So thank you again for all of our members that contribute heavy to the due diligence in our group. I really appreciate you. You have no idea. Thank you. Hey man, I appreciate you too. I'll definitely, I'm very honored to have you guys here. He's retweeting Andrew Toy from the interview. Exactly. That's pretty much exactly. Took me a while. Again, I'm reading this for the first time with you guys. That's that, so yeah. All right. So let's continue here. Right. Let's see. I'm still reading the comments here. Yeah, I'm hoping this takes us for a ride, buying $250 a week every week till it gets to $5, then reevaluate for the current fundamentals, dollar cost averaging. I mean, hey man, that's and I hope you have other companies too. I mean, the stock market is great. I mean, Adobe. I need to make a video about Adobe. One doctor was telling me, he's like, man, can you do an intrinsic value calculation on Adobe? I'm like, all right, fine, I'll do an intrinsic value. I'll do Adobe. I did it quickly. It's it's undervalued, right? But I got to go ahead and redo it again. All right. So yes, we want to be like smart money. I want to be dumb money. Right? Of course we want to be smart. Hell yeah. All right. Could they have already sold? In what context? No, honestly, man, honestly, there are still some retail investors in the stock that if it just drops like one bad drop, like I'm talking like a really, really bad drop, they would be like, I can't handle it. I'm selling. You know what I mean? So that, you'd be surprised of what retail investors could do. All right. Hello. Good. Absolutely. I mean, I'm not a financial advisor, but I'm doubling down, man. I'm continually doubling down, right? It is beautiful. It is beautiful. What's not beautiful is our healthcare system. That's my God. But I have faith. But it's pretty bad, guys. Oh God, it's pretty bad. But we need to change it because we have to stand on the shoulder, the shoulders of our mentors. And if we don't improve it, then no one else will. All right. So with that stated, what are my concluding statements? Well, first off, I look like hot crap. So thank you for listening to me while I look like hot crap. I just literally got out of a shift from the hospital, 12-hour plus shift. Thank you so much for bearing with me. It means a lot. I need to shave, I'm just a little bit, tired, but thank you for bearing with me. But let's summarize. Well, Andrew Toy is taking over the company in 2023. He's going to go ahead and he's going to be leading it. They love diversity. I love diversity. And CMS loves diversity, and they're transitioning into ACO, which focuses on healthcare disparities. They said that there's still going to be industry-leading growth, which is great, but at the same time, focus on sustainability and profitability. They're going to help decrease MCR, medical cost ratio. These are all the things that are going to be fundamentally making the company stronger. Okay. I mind you, 2 months from now will be November. A year from November, we would have diluted shareholders. And so many investors were saying, I hate Clover. But Clover came online and they said, well, hey, listen, next year we think there's going to be a recession. Do you remember that? Or did you guys forget? Let's see if we can find it. No, not that one. I'll find it. See if I can find it. Yeah, I'll show it to you. So you remember when Clover said that we're going to be in a recession next year? This was November of 2021. Well, ladies and gentlemen, we're here. Okay, we're here. This company is very strict. They're very smart, right? Anywho, I love each and every one of you. God bless you. Hopefully, my dogs don't take out the. They like to run around me because, you know. But hey, let me show you my dog here. Come here, buddy. Come here, buddy. Come here. Oh, okay. Not you. I said, buddy, not Coco. Oh yeah. Come here, buddy. Come here. Up. All right. Oh. All right. That's all I get. But I love each and every one of you guys. I mean, the writing is clear on the wall, but comment down below when the video is over, because then it'll be new comments. I don't know why YouTube does this. What do you think about Clover? Are you done with Clover? Do you hate Clover? Do you hate the stock market? Do you hate me? Do you hate my dogs? I'm just kidding. I'm really tired right now. I love you guys. Okay. Here's my goal. My goal is to here's my ideal. You know, everyone has dreams, but that was my dog hitting their head, and there goes their dreams. Everyone has dreams, and you know what my dreams are? My dreams is to wear. Let me show you. You know, everyone has dreams, and these are my dreams. Let me go ahead and. Yeah, I don't even know how to use Facebook anymore. I'll tell you. I'm logged on Facebook in a minute. All right, let's go ahead. All right, there it is. Okay. These are my dreams, okay? Here's my dreams. This is me in Hershey, Pennsylvania at the 4th International Neurosurgery Residency course back in 2019. I was doing a lateral palpable skull-based procedure and practicing in the 4th International Neurosurgery Residency course as a first-year medical student. Yeah, right. It's crazy. I'm crazy. My goal is to go in that operating room, work on the brain. At the same time, my videos, our software, our stock alerts, brain machine, mastering stock market course is helping retail investors out there. And we're helping literally 24/7 in service of God. I mean, it's just amazing what a life this is, right? Being in, helping the patient, going into academic medicine, teaching, future residents, right? And just watching that tree grow. I mean, seriously, man, how else do you want to live this world? It's very good. But that's my dream. Okay. So I love you guys. Hope, we'll see you on the other side in the next couple of years. It's going to be great with Clover. And we're going to remember today the $1.80 day. And we're going to talk in about 5 years from now. We're going to be like, wow. It's 30 cents. I'm just kidding. Have a wonderful good night, guys. I love you. God bless you. And I'll see you on the next one. I'm going to go shave and give my brain some rest.